Hello and welcome to today's edition of Mexico News Network's Breaking News Business. I'm your host, Elliot Bullman. Remember to follow us on all our social networks for relevant stories and news. Let's start with today's information. Mexican telecom mogul Carlos Slim Elu sold $10 million worth of shares in the New York Times, according to a report filed last week with the U.S. Securities and Exchange Commission. Just a day after the newspaper reported earnings during the second quarter of the year, the Mexican billionaire sold newspaper stock equivalent to 521,500 shares, a tiny fraction of his total stake in the paper. The share price of the New York Times has risen about 50% in the past year, so it's possible that Slim intended to lock in some profits. Back in 2015, Slim more than doubled his stake in the New York Times to nearly 17%, becoming the paper's largest single investor. Slim, the Mexican business tycoon with a telecom empire operating in 18 Latin American countries, paid $101.1 million to exercise warrants to acquire nearly 16 million shares of the company's Class A stock at a price of over $6.36 a share, increasing the stake from 7% to 16.8%, the paper said at the time. Slim owned nearly 28 million shares in total before last Tuesday's sale, about 9 million of which are owned via his finance firm, Grupo Financiero Inbursa. Slim's direct stake in the New York Times is currently worth about $370 million. In other news, the Secretary of Economy, Ildefonso Guajardo, has officially presented Mexico's Nafta trade talks team. Guajardo told a news conference that the three negotiators have more than 20 years of being civil servants in the Secretariat with responsibilities in Mexico's office in Washington. Mexico's negotiating team will be led by US-trained economist Kenneth Smith, who, despite his Anglo-Saxon-sounding name, is super Mexican, Economy Minister Ildefonso Guajardo joked with journalists. Smith is a veteran Mexican trade policy expert and currently serves as director of the Trade and North American Free Trade Agreement office at the Mexican Embassy in Washington. Juan Carlos Baker Pineda is currently Undersecretary of Foreign Trade of the Ministry of Economy, a unit in which he's worked for more than 20 years. He's held, among other positions, the Director General for North America in the Undersecretariat of Foreign Trade, where he supervised the commercial relationship with the United States and Canada through the monitoring of the fulfillment of the Nafta agreement. Salvador Bear Levalle is the Deputy Chief of Technical Negotiation for Nafta. He's currently Director General for North America at the Ministry of Economy. He began his career in the branch in 1995 as Director of International Trade and Legal Affairs, a position he held until 2002. So these three trade negotiating veterans will have the daunting task of preventing Trump's trade team from imposing tariffs and protectionism measures, whilst updating an agreement which needs to embrace e-commerce, telecommunications, and Mexico's migrant labor force in the United States. Moving on. France's premier football club, Paris Saint-Germain, finally prized Brazilian soccer star Neymar away from Barcelona last Friday after triggering his €222 million release clause, completing the most expensive transfer in football history. The forward has signed a 5-year contract, and he immediately pledged to conquer the titles which PSG craves. The deal speaks volumes about the almost insane sums of money being thrown at players and clubs in Europe as the continent's transfer market goes into hyperdrive this month. The influx of cash into European soccer over the past few years has been driven by the Gulf states and China, and by the enormous revenues earned by the top clubs through sponsorship and television rights. Neymar's world record transfer shatters the previous record set last year with the signing of Paul Pogba from Juventus to Manchester United. Not everybody is happy though, including Javier Tebas, La Liga president. Last week, he threatened legal action against Paris Saint-Germain over what he describes as a breach of UEFA's financial fair play rules to land Neymar's signature. He's determined that UEFA launches a full investigation into whether PSG is in breach of UEFA's financial fair play rules. Qatar Sports Investments, owned by the state, bought Paris Saint-Germain 5 years ago for $170 million as part of the kingdom's largest strategy to invest in global brands, whether in business, fashion, property or sport. The Parisian club's president, Nasser El Khelaifi, the Qatari businessman who led the acquisition of the Ligue 1 club in 2001, was delighted to get his man. $170 million sounds like a lot of money for an ordinary team in an ordinary league, right? But not really when you're sitting on more than $300 billion in assets. It's a lunch. And finally, let's check the markets. The Mexican peso increased 0.15% to 17.94 from 17.92 in the previous trading session. IPC Mexico increased 0.06% to 51,418 from 51,389 in the previous trading session. This was all for today. Thank you for staying with us. I'm your host, Elliot Bullman. Remember to follow us on Facebook, Twitter, and Google+, and log on to MexicoNewsNetwork.com for more information on Mexico and the world. Until next time.